Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our trading room recording on Friday, the 16th of July, 2021. It's really warm here today, guys, which is unusual for Ireland and the UK. So I'll be getting this done quickly today and getting out to enjoy it, because the way the weather is here, it could be gone by this afternoon or tomorrow, guys. So you got to enjoy it when you've got it. Let's just get on to the economic news for the day. For yesterday. The one we didn't know yesterday was inflation rate in New Zealand came in at 3.3. The New Zealand dollar had already started moving long earlier in the week when their interest rate decision had been made. If we go back a little bit, we'll find it here somewhere. Yeah, there it was on the 14th, which was 2 days ago. And that moved not because they actually moved the interest rate, but because of the statement moved the New Zealand dollar in a positive direction. And then, as I say, last night we had inflation coming at 3.3, higher than forecast. So yet again, there was another little boost to the New Zealand dollar. Unfortunately, I'm not trading it in the right direction. So we'll have to see how it goes. I have a stop loss, and if it goes any further, we'll just get ourselves stopped out of it, guys. As far as today's concerned, we've got Bank of Japan interest rate decision. As usual, they've held it at minus 0.1%. Now, I haven't heard anything about the quarterly outlook report yet, but I will be keeping an eye on that just to see if we get any opportunities on the yen. Remember, guys, the way these things work, these currency pairs, if you get an idea on a particular currency that's going to go in a particular direction, you can trade that trend for weeks, guys, or even months. But it's about establishing the trend first. And because everyone's running, on minus 0.1, I think the US is, can't remember off the top of my head, 0.25, is it? Or is it zero? We saw there, New Zealand's on 0.25. So we're not having those interest rate differentials at the minute to give us a direction. So it's tough. But we'll just keep working at it. We'll keep looking at it. And if we see opportunities, then we will talk about them, guys. Core inflation rate in the Eurozone came in as expected. US retail sales and the Michigan consumer sentiment will come in later today. So it'll be interesting to see how they come in. At the moment, bond rates or yields are going up a little bit, but they're way below where they were back in March. They were on at 1.7 or thereabouts in March, and they dropped the way back down to, I think, around 1.3 now, guys, which is a massive percentage change. We'll have to see if they react to this, whatever it comes out at. But the big move or the next big thing that the market's looking for, so far as the dollar's concerned, will probably be July, August, September time, guys. One of those 2 months, the Fed may indicate that they're going to start moving sooner rather than later. And if they do, then the dollar will start going long. But between now and then, obviously, there may be opportunities. I'm trying to take the dollar short on the ending diagonal. So that's a pure technical trade, guys. I don't like taking pure technical trades. I prefer to trade with fundamentals. But at the moment, because everything's so flat, we're just taking little chances to try and catch something here and there, guys. Especially since the stock markets are coming off a little bit at the moment as well. So there isn't a lot to be made there other than maybe adding to your positions on the dip, but we'll talk about that in a moment. Okay, so let's get on to the actual charts. And we did have that drawdown on the NASDAQ, which didn't, listen, my account was drawn down yesterday as well, but because I'm not as heavy on growth stocks, I wasn't as badly hit as some other people. but that's a strategy thing, guys. I've been looking for a deeper correction in this, and for that reason, and I've been saying it during the week, but I don't know if it's the same people listening every day or whether we're getting new people every day. So just kind of have to go over it. If we get that, then we should see gold going up, guys. And therefore I took a little bit of insurance policy on, and also got into more cyclical stocks, and got away from the growth stocks because they were really overvalued, and they still are really overvalued, guys. So in the short term, it's entirely possible that those growth stocks, come back in and push on up. But if we look at this chart overall, and then we look at the headwinds, particularly with inflation starting to kick in, with the Fed then potentially going to start hiking interest rates, or at least cutting back on their printing of money, you certainly could see another half decent correction on this. Now, whether it's going to be a deep and not be a crash, guys, we're not looking for a crash, but there could well be a correction on it. Now, because I'm sitting with about 50% cash, then I should be able to take advantage of that. Now, it doesn't mean that we'll catch the bottom, but it does mean that we'll get in a lot cheaper if we wait for those growth stocks to come back down again, guys. It may not happen, but generally speaking, every so often when you get a move like that, you'll get a correction, guys. It could push on up a little bit more, and then we could well get a deeper correction on this, down into that sort of area there. I'm not saying that's going to happen, guys, but don't be surprised if it does. And if it does, then I'm sitting in a nice position to take advantage of it. Okay. But that doesn't mean that the account at the moment won't get drawn down by that. Of course it will. And then with those guys who are fully invested in growth stocks, well, the results so far this year are obviously better than mine. If it continues to go up, their results will continue to be better than mine this year. And but if we get the drawdown, then once we're through the wash off it, then my results will be better. So it's you've got to pick your strategy, guys, and then run with it and see what comes out in the wash. Okay, so that's the NASDAQ. Let's get down to the 1 hour time scale. Not that it's going to tell us much. I think it's slightly up today, folks. Yeah, there's a little bit of a turn up there. I wouldn't be surprised. Listen, there's one thing about this is that it could be a little running flat, and I hope it is. I'd love this to keep going up. It could be a little running flat, something like that, guys, where this ends up pushing on up. We're not trading the index, so it doesn't really matter. It's just about getting an idea in your head about where stocks are going to keep going and whether to take the chance now and buy into any of those growth stocks that have dropped a little bit, or whether you're, maybe you want to wait and see if this turns out to be a deeper pullback, guys. I don't see anything. There's not too much noise out there about, just reading this here, gold heads for fourth weekly gain as Powell defends stimulus. So because Powell's doing what he's doing doesn't mean the market agrees with him, guys. So the fourth weekly gain in gold. So we're getting sidetracked here with this. I've got Bloomberg on here, guys. I'm just listening, or not listening, I'm reading what they're saying here. Fourth weekly gain. Oh, yeah. Well, I suppose it is. It hasn't been much of a gain, guys, and there's a little drawdown there on it. I'm looking for this to push on up. Okay. So if this drops, we should see a push up in gold, guys. Unless it's a crash, then you'll see a ring drop. But if it's just a move, taking some money off the table, well, where will we put it? Will we hold it in cash? Will we buy bonds with it? Will we put it into gold? You'll have the choices. And of course, Bitcoin as well. But yeah, I don't deal with Bitcoin on here, guys, because it's too volatile. Okay. And by the way, Bitcoin's way down as well, but we'll look at that in a moment. Dow Jones, it's up there near its all-time high, guys. Coming into a little double top. Is it going to break off here, or is it going to bomb on through? We'll have to see. I don't think of too many stocks that are in the Dow Jones. They're nearly all in the Nasdaq. I think, and that's to do with eToro, guys. That's nothing to do with me not wanting to trade those. S&P, just a little turn off there. Nothing to write home about, guys. It's the same as you would expect. Just trying to get this. Yeah, there's nothing much to write home about there. So don't think there's anything to panic about at the moment, folks. Although that's quite a drop off there, isn't it? Although we had that one and it's gone into the red. There could be a little bit more downside to it. But as I say, nothing to make you want to change your strategy or to dump anything at the moment, I would say. Nikkei. We'll just clean it up, guys, because it's getting a bit messy. Yeah, the Nikkei is still in this corrective structure, guys. Eventually it'll probably break out, but I also don't have any Japanese stocks. UK, running flat at the moment, folks. I think there's more upside to this, but when it's going to go, not entirely sure. I have a few UK stocks, Rio Tinto in London, Whitbread. Bit disappointed with Whitbread because we were getting the opening up and pubs were opening, hotels are opening. I thought, well, Whitbread will gain from that. And I think a lot of it might have been priced in. But having said that, their stock price is still way below where it was before the crash last year. So I think there's still upside to it. So just going to have to hang on to it for a few months. I prefer getting in and out of things, guys, but sometimes you just get stuck in something and therefore you become a long-term investor. So I'm a long-term investor for my strategy. I'm a long-term investor in Whitbread. French, little drawdown. German, little drawdown. As I said yesterday, if we saw something like that, then there might be an opportunity to trade that long from there, but I don't trade the indexes, folks. China, still on the way down here. No sign of that changing at the moment. There's a little bit more argy-bargy going on between China and the US at the moment, particularly over Hong Kong. Hong Kong was supposed to be one nation, two systems, where when it was handed over, I think it was 97, it was handed over from UK control, and they were given 50 years to continue to operate as a democracy. But China's just knocked that in the head the last couple of years, so I don't know what there's much you can do about it, but obviously sanctions and what have you. So I'm a little bit concerned about that because I have Baidu, and if people stop investing in it because of the argy-bargy going on or fears, then Baidu will continue to go down instead of coming up. So I'm just keeping an eye on that and trying to have a thought whether I just dump it. You know, it's maybe down 10% or something. Aussie, running flat, and the Russell, well, we kind of said if it dips down into here, potentially you're going to see it coming back up again if it just stays in this flat correction it's been in for the whole of the year, guys. So there's not really much information out of this, guys, but you need to keep your eye on it, because I guarantee you the day you take your eye off it, the day you don't take it all in, will be the day that you miss an opportunity. So a lot of this is just boring repetition, guys, going through, trying to build up a picture. Sometimes we see opportunities, sometimes we don't. Sometimes we see something that says, hey, let's close that trade. And other times it will be, let's keep an eye on that because there could be an opportunity there. Now, this trade here that I have, the US dollar currency index, we took it short from in here somewhere. It went up, dropped back down. It was almost break even. Today it's pushing back up. Listen, over maybe August, we're in July, August, September sometime, guys, maybe the Fed comes out and says they're going to taper, well then wherever the dollar is at that stage, we could well see a bit of a push up on it. Now, I'm not expecting it to go, we're not expecting it to go back up there, guys. But you could see more upside to it than downside. But that's a month away, and the dollar's going to do something between now and then. And for the last, when was that? That was January. So the whole of the year, it's been running flat, guys. So I'm betting that it's going to stay running flat, and we're going to see a drawdown on here. I have a stop loss above there, so I'm not going to get stung badly by it, but it would be nice to see it drop. And so why am I hanging on to it? Because these things, you forecast these things, guys, but the timing often's tough. And the amount of times I forecast things correctly and then got out of the trade, and sometimes you literally get out of the trade the day before it takes off. Not deliberately, but you've been in it 2 months. Nothing's happened. Oh, I'm getting out of that. And the next thing you know, bang, off it goes. So you do need to be patient with these things. As I said earlier in the week, when we saw that ending diagonal, I said this was going to go long. And I got long in there, and it moved back and forth. And every time it came back down to zero for me, I got out. I think it was twice a trade over a period of a month. And they end up, I said, oh, I'm getting out of this. So I got out of it, and then sure enough, a week later, we got that move. So you do need to be patient. So now I've traded it this way. It hasn't worked out for the whole of this week, but I'm going to be patient, guys. Listen, this could still push up, maybe up into there before it goes. I don't know if I'll still be in it by then. Remember, we're on a 4-hour time scale here. So that might be a little bit too much for me to take. If it goes up there, I'll let it stop out, and then we'll see where it goes. And Euro USD will be the exact opposite. So if the dollar drops, then we'll see that move up there, guys. And the pound, yet again, I'm looking for that. As we're not looking for anything more than a nice little trade, guys. We're not saying the trend's changing and it's going away up there. We're just going to take a nice little profit, and then we'll see where we are, because that's the way things are at the moment. We don't have a trend, a long trend or a short trend. We've got a flat trend. So we're just trying to, trade it the best we can. Aussie, same thing. I'm looking for that to go long. New Zealand, not much of a move in that, but I know the New Zealand itself has moved. Maybe that was the little move there, but I get the feeling this is going to move, guys. We've showed you it all week. This divergence here, it looks like it's going to break out. CAD, not so much there, but if the dollar drops, this will drop. And the same with this. If the dollar drops, this will drop. You might see this move first. Often this seems to go before the rest, guys. The yen. Obviously, this is the other way around. No, it's not. It's the same way around. Aussie, New Zealand. Yeah. Aussie, you're looking for it to go long, and then this you're looking for it to go short. Not sure about the yen at the minute, guys, so just leave it alone. And then I'm looking for that to drop yet again if the dollar drops. And but just be careful with this one. Just be careful with the yen and the Swiss, particularly the Swiss, because if the dollar goes short, gold will go long, Swiss will get a boost. So this one isn't as as good a trade as maybe some of the other ones, guys. I've just realised this is one that I'm in. How did I manage that? Oh, there you go. Chinese yuan, yet again, it should drop if the dollar drops. Gold, little pullback at the moment, guys. I'm looking for this to push on up, but we're not saying that it can't do that. If dollar goes long, then gold could certainly do that. But I'm not expecting that to happen yet. And this gold trade could be a long-term thing, guys. It's a hedge against inflation. If inflation takes off, you know, we could see the gold price continuing to go up. AG, same thing. It's in there at the moment. It's had a little bit of a pullback today. If it drops, I'll just add to the position because I don't think it'll drop more than there, and it'll come back up again. Although I'm around 0 on it at the moment, so if it drops, I might just get out of it for a 0 and allow it to drop and then come back up. Bitcoin is continuing to drop, guys, as we said it would. We'll have to see where it gets to. I've a very, very small amount of Bitcoin in Coinbase, guys. As well, because it had dropped so much, I said, well, at some point it'll probably come back up, but you could be stuck in it for months. I had a little bit of, I don't get very many comments, but then I haven't been doing this on YouTube for very long, guys. I haven't built it up. You need to do a bit of marketing and one thing and another. But I got 8 comments yesterday, and it had to be spam because the comment was nothing about what I'd been talking about. It was all about Bitcoin. And then there's 7 other people backing up the guy that had put it out there. It just looks like a nice little spam setup that someone set up on a computer, and it's just gone out there on the YouTube and firing it on as a comment, guys. So I just deleted it. I hope it's been deleted for everybody. But then if you want to leave a comment, even though it's just great, thanks, you know, fantastic. I don't need you to be argumentative with me. It just ruins your day. It's a process, guys. It's not about what we particularly say in any particular day. It's about building up a picture. Okay, US oil. Don't see any reason for oil to drop. It could run flat for a little while, as we've been saying. But it's going to stay up here and maybe even a little bit higher, guys. So we're not looking for oil to come away down here. So I don't trade oil. I've traded it in the past, but it's expensive to trade, guys, and I just gave up on it. EuroCAD, a little bit of a breakout there. That will be because of the oil price, guys. It's pushed on up. Is it going to break out from there? I don't know. I'll just put a little alarm on it. I'm not particularly keen on trading against the CAD, guys. I do like trading the CAD long. But that's just my personal view, or it's not a view. It's you know, you just get little things. It's like the Aussie. I don't like trading against the Aussie. I don't like trading against the CAD. And I don't know if that's the right thing to do or the wrong thing to do, but it's just something I've developed over the years. So where they're concerned, I tend to only trade them in one direction. And that's the same with this Euro Aussie. It's in this structure, guys. It'll probably stay in that structure until at some point we get either a move long or short in the dollar. If we get a move long in the dollar, then this will break short. And if we get a move short in the dollar, this will break out. Euro New Zealand, and it's the same. You see exactly the same structure. It's not for me at the minute, guys. Euro yen, same thing. We're waiting to see what the dollar does, because if the euro tends to move in the opposite direction of the dollar, guys. Euro Swiss looks like it's at the bottom of that structure, and it wants to move long. It's almost the opposite of the dollar Swiss trade, guys. So I'll not be taking, because I'm already in the dollar Swiss. Pound CAD, little bit of a breakout there, guys. Did I say yesterday? What did I say about that? I know I was talking about a little running flat at some point. Might have been on the NASDAQ. Now, one thing I'll just point out. When I draw something, it doesn't necessarily mean that I think that that's going to happen. what we're saying is that if that happens, then that would be a nice setup for going long. Okay, so don't mix up, and that doesn't mean that I think it's going to go to there. That's just the direction I think the trade will go in. And if you get into the trade, then we manage the trade. But if we're not in the trade, there's no point in wasting time managing it. So, and obviously if I thought that the opportunity was for this to move to there or to break out, then I'd draw a bigger arrow. But it doesn't mean exactly to that point, because over the last lot of years, I often get people saying, what makes you think it's going to go to the exact number? I'm going, well, I don't. The arrow just shows you where I think it's going to go. I'm not saying it's going to get to that point because I don't see the point in it. I trade percentages, guys. If I get in a trade and it moves 50 pips and I make my percentage, I'm out. So, but if it has to go 100 pips or 150 pips for me to make the percentage that I want on it, then I'll leave it in until it gets to that point. So it's nothing to do with pips, and it's nothing to do with exact numbers, because you will find that price there, 1.73816, if you go over to eToro, that will not be the price that you're buying it at, guys. So there's no point in saying it's going to go to exactly that price, because that will not be the price that you'll see on eToro. And when I first started trading eToro, I was doing that, and I kept getting stopped out, and I couldn't understand why. And it was because of the difference between these charts and eToro's charts. So always, you can do your drawings on TradingView, but always check your prices on whatever platform you're using to do your purchases. Now, I think you can link TradingView to brokers, and maybe the prices are the same, but they're certainly not the same as with eToro. Okay. Pound Oz. Another little push up on the pound there, guys. Maybe it's the opening up trade. It's at the bottom. It's at the top of that range there. Can it break out? Certainly it can. But I certainly wouldn't be buying there, guys. If it goes from here, fantastic, but I'll not be in it. But if it came back down, then I would consider trading it up again, just as I said there. Probably just as I said there and there. And obviously you don't necessarily catch them. They're half decent little trades. Now, as you know, I don't deal in pips, but just to give us an idea. That's 2.49% with a 10% or 10 times leverage. You're not going to get it exact from there to there. Remember, we're on 4 hours. That's a nice trade from there to there, guys. That's a nice trade if you caught that short. So we're out looking at the structure. But if you go in tight, you can see there's some nice trades in there, guys. That's a nice trade. You make money on that. Let's say you get in there and say get out there. That's 266 pips or 1.49% times 10's leverage if you're on 10 leverage. And then obviously your position size brings it back down to your percentage of your actual portfolio. Okay, so if that drops, I'd look to trade it long. Now this is dropping because we've a little bit of strength on the New Zealand at the moment. Now here, because with that alarm line, I was looking for this to break out and go long. I didn't actually trade it because I think it was it was still on holiday or on leave last week. Not that I went anywhere, but I just took a break from trading, guys. It can get quite stressful doing these day after day, folks. I'm not, because of the way the New Zealand's been moving at the moment, I'm not overly keen on trying to trade that up. But let's keep an eye on it. Pound Swiss. Yet again, it looks like it wants to go long, but it's been in this flat for a long time. It's in the middle. I never trade anything in the middle of a range. Either trade it from the top down or excuse me, or trade it from the bottom up. Never trade anything in the middle of a range, guys, because it can go either way from there. Pound euro, look at it again, guys. Not worth trading, really. Pound yen, yet again, it looks like it wants to do that, but if I take any of these, guys, I'll let you know. Aussie yen. Is there a little double bottom there that's going to break out? Don't know yet. Aussie New Zealand, this is my old pal that I hadn't traded for months. And then with that little spike there, I decided, oh, I'm going to get into this because this is going to break out. It's going to give us a zigzag. And then that day, bang. And then yesterday, bang. It's actually broken down below there. It can't be that far off my stop loss. If it goes for any further, I'm out of it. It can be annoying when things like that happen, guys, but you got to understand it's just part of trading. You're not going to get everything right all of the time. The important thing is just to get it right more often than you get it wrong, and then you'll make money. But things like that happen. Don't worry about it. Doesn't mean you don't know what you're doing. It's just the way markets are, guys. And you can't... I have an 80-20 rule, guys. And the 80-20 rule is this, is that if you spend 20% of your time on a problem, any problem, you'll get 80% of it worked out. So then you've got to decide with your other 80% of your time, do you put that into this to get 100% over here? Or do you use 20% of your other 80 to do another 80% of something else? In other words, your productivity can be so much higher if you don't get into the minutiae of things. Do you know, if you go on to TradingView and you look at how I'm doing charts and you look at how I'm scribbling, I'm doing that and I'm doing this. If you go into TradingView, you'll see people who use these tools and they'll go, well, I don't know if this is going to work out or not. They'll go, what, 1, 2, 3, 4, 5. You know, that's not what it is, but you understand what I'm saying. And then they'll zoom in on it again and they'll have an ABC in there somewhere, or they'll have ABC to ABC at X with it, and they've worked the whole thing out. Well, do you know what? I just look at the structure and I say to myself, I don't know if this is the best example. Let's say that is an impulse. I go, impulse, there's a correction going on there. What's the fundamentals saying? Yeah, it's looking like it's going to continue the trend. At some point, this will break out and it will move up and your target will be there. That's doing 20% of your time, or using 20% of your time and getting 80% of the work done, guys. Don't waste your time going 1, 2, 3, 4, 5, ABC. Now, if you're learning Elliott, certainly you can go through that, but it will frustrate you because it isn't like painting by numbers. It isn't going to be exact. It's about a general thing. Generally speaking, impulses will give you 5 waves. Generally speaking, when you get corrections, it'll go in 3s. We'll just trying to look for one. You could look at this. You go 1, 2, 3. That's a flat. And just look at it. If it's running flat, then it's a flat, guys. If it's doing that, then it's a zigzag. If it's doing that, then it's an impulse. Okay, you don't need to get into all that minutia because you'll fry your brain and you'll get nothing done. Okay. But that's all right for me to say because I've been doing it for years, guys. But I can remember learning it and listening to hundreds of videos of people showing you, in the minutia. Yes, understand the basics of it. Yes, understand what it's about, but then get away from, it's like the bones of a skeleton. Do you ever see where archaeologists, they find a skull and then they give it to those people that can put, is it molding plastic or putty or plasticine, we would call it, and they put it on and they slowly, because they understand the structure of muscles, and they slowly build up the muscles on the bone, on the skull, and then they eventually they have what is a pretty good equivalent of what the face based on that skull would have looked like. Well, that's what we're doing here, guys. These lines are the bones, and then we're using our experience and what fundamental information's around it at that time to try and make what the person would have looked like. What is this going to look like next week and next month, guys? So you're putting muscles on, and maybe you're taking a bit off, and then you're molding it, you're sculpting it. I was never much good at art, guys, so I don't have the right terminology, but I hope you understand what I'm talking about. That's what we're doing with this. And sometimes you get it bang on and away you go, and other times you get it wrong, and it's okay. So long as you're not over trading. Okay, yet again, a flat Aussie CAD running back and forward. If it drops down to there, maybe we look to trade it up. That's running flat as well at the moment, folks. If the gold price starts to push up, then you'll see more upside to that. That's why I'm a little bit wary of doing this. I've actually haven't drawn this correctly, guys, because what I would normally do is, if you're looking for, you're saying if that happens, then you look to trade it long from there. So the arrow shouldn't be on there. The arrow is the direction to trade it in, and I'm not suggesting we trade that down. If it were to come down into there, maybe we look to trade it up. I don't know if it's going to get down there, though, guys. It could take off from here. So because we don't know, we just admit we don't know and we leave it alone. And most of the time you won't know. Because if you knew every single day, guys, we'd all be millionaires. And I wouldn't be sitting here talking. I'd be away out in my boat. Do you know what I mean? So for all those people that blow themselves up out there and go on about how smart they are, they're so smart that they're on the internet trying to make money, guys. Do you know what I'm saying? They're so good at trading. Trading's hard, guys. It's hard for everybody. That's the point I'm making. There's nobody out there that it's easy for. What you can make easy is your attitude, and therefore it's not so stressful. Swiss yen, or Swiss CAD, yet again, I love trading this up. We showed you last week. Let's just go and look at my stats while we're here. Oh, where did they go? Sorry about that, folks, right? It just decided to. CAD Swiss, 100% profitable, guys. No losses. But I only trade it when I know what's going on. So I hope you understand what I'm saying when I'm going through this and going, no, it's because when you get a trend and you know fundamentally where it should be going, then you can get away with getting, well, not necessarily 100%, but you can certainly get 85% of your trades correct. And if you're not in that situation, then you're guessing. Therefore, you leave it alone, guys. And it's okay to admit you don't know. But you got to keep looking, and because the day you stop looking is the day that you miss the breakout, or it's the day that you miss the setup, guys. So you got to go through it every day. What I'll do from next week, and I've said this before, anyone who wants to try and understand how my brain works, you should be listening to this. And I know it's a long, laborious thing, but at least do a lot of weeks of listening to it, and then after that, pick the bits that you're interested in. You're interested in the dollar, go and find that little recording, or you're interested in the Aussie, go and find that little bit. And then I will start to put out little summaries on a daily basis. Okay, CAD yen, same thing. I'm looking for it to go long, but the timing's just not right at the moment. New Zealand yen, probably looking for that to go long as well, guys. I don't have it at the minute that I want to get interested. I want to get into that. New Zealand CAD. I have a sneaking suspicion this is going to go flat from here. In other words, it could come down, but I don't want to trade it down, but I would like to trade it long. But maybe from there, we go into the 1 hour time scale. Now, I didn't take this trade the other day, but that's where I should have taken it. The difficulty I have with the New Zealand is because it's the other side of the world, its movement usually happens when I'm asleep. So I often miss them, guys. So that movement there, that little breakout, was 3 a.m. for me. So there was no way I was catching that. I wouldn't even have heard the alarm go off, guys, because the computer was switched off. So, but the place to get involved in this would have been there. Then you've got your stop on 0. And then you've got to decide, do I take that profit that I just had there? Or do I want to risk it and go on up? Remembering with your stop loss at 0, you're not risking your own money, guys. You're just risking the little bit that you've made there. So you decide, do you want to stay in there? If you're not in it, in that situation, don't be getting in it, guys. If it were to come back down again and give us another setup, well, then maybe we look to trade it up. New Zealand Swiss. Well, I've got that arrow pointing up, guys, but to be quite honest, when you see a little structure like that, you do need to be careful. Because you've had an impulse, you've a pullback, is it going to do that? Now, I don't particularly want to try and trade that, but because of that, I'd be wary of trying to trade it all. Okay, quick look at the results. We're continuing on into the red, guys. Now 1.56 for the month. Unless things turn around, looks like this month's going to be, it's going to be a red. Could get worse. But I just always check. We talked a lot about this yesterday. We're just using Jay because Jay's the most copied trader on eToro. With approximately $100 million copy on him. Brilliant. Nothing bad to say about the guy. But I just use it as to see, is my strategy working this month better than his, or is his strategy working better than mine? And at the moment, mine is, but if we had a turnaround, he would very quickly gain that back, guys. So for this month, he's down 6%. So it makes me a little bit okay with being drawn down 1.6% or 5-6%, because it means that drawdown isn't because of something that I've done wrong. That's because the market's moved in that direction this month, and most of us are feeling it. Okay, so let's see how it goes today. Maybe next week, if it continues to drop, maybe we'll take something off the table, guys. We'll have to see. Haven't done that yet. I actually bought into a few things. Added to a few positions yesterday, guys. I bought GDX. It's up 0.5%. And did I add to this? 15th, the 7th. Yep. I added the DDXJ. This is just putting a little bit more on the gold. I'm not worried about that gold, guys. If it drops, it drops, but it will come back up again. KGFC. Yeah, it didn't add to that. There's already enough in that, folks. That's Kinross Gold Company. Not the same one I used to work on in South Africa. Wheaton Precious Metals. Didn't add to that. And then you've got the other ones that have taken recently as a bit of a hedge against growth stocks. Rio Tinto, guys. Little bit of a drawdown, nothing much to write home about. I took it in London initially, and then I realised I could have taken it in NASDAQ as well. There's the London one there. I've added to that last month. Those will come up. Those will come right, guys. We might just have to wait a while for them to come up. And then Whitbread. I just added a little bit to Whitbread yesterday. It's up, say, 2%. It took a dive. Took a little dive there. Now, potentially there's a lot more downside to it. But if you take this out into the, that's 4 hours. Let's take it out to the daily. There's the drop last year, guys. It's nowhere near recovered from that. So I'm thinking there's a lot more upside to this. It's not going to go up like that, but it could gradually over the weeks and months do this. So, and if, in 6 months' time, this could look really cheap. So that's why I'm into that. And it was also a little bit of diversification. away from the growth stocks, because growth stocks are just ridiculously high at the minute, guys. If we go and look at some of the growth stocks, say Jay's in, let's take Airbnb for example. When we go over and we look at their stats, no PE, they're not making any money, guys. You know, you could have some of that, but at the moment, not so sure. No PE. As I say, have a percentage of your company, of your portfolio that's either very high PE or no PE. You're based on potential growth, but you don't want your whole account in that, because if it goes wrong, then you're going to be in a lot of trouble. And I know Jay's done really well over the years, and I'm certainly not criticizing him in any way. But if you go back a little bit, there's minus 53% there, guys. So, you know, okay, it was, what, 3 years ago? 3 years ago. 340 the year before. Now, it's 2017, good year for the dollar, good year for Bitcoin. So he's probably made that in the dollar and Bitcoin. So you can see why people follow him, guys. But let's learn from it. Let's learn from it. And I don't ever want to do that, folks. I panic when I'm, you know, not panic. Panic's not the right word, guys. But I take action when we are 5, 6, 7% down, guys. As you'll see, my statistics aren't anywhere near as good as that. And there's reasons for that. The reason being that we were trading a very small account for the last couple of years. And also we were only trading currencies. But you can see that I really took strides to not let that drop below 10%, folks. And that was 3% of a 300 3% of a $300 account. So it was $9, guys, but it shows up as minus 3% for the year. And that was minus 7% of a couple of thousand, you know, 7 2, that was $140, but it came out at minus 7%. We've now got a proper account with 20 odd thousand in there at the minute, guys. So these are proper numbers now, which is the reason why we've done that, was to enable us to start trading stocks. Because when you change your position sizes, because we were trading at $300, you have to trade 10% position sizes, because the minimum you can trade is $25, guys. So these were 10% position sizes, and through here as well, we were using 10% position sizes. And then I decided at the start of this year, listen, we need to change this up. And we started putting some money in it. And so why did I do it like that? Well, I was trying to show the people I was training at the time how to start with a very small amount of money and gradually add a little bit every month, and show them how to build the account up with patience and set a target of 0. So that you're not over trading, and then obviously if you get more than that, fantastic. But to stop you over trading and to get a couple of years experience, and that's what we were doing there, guys. And even this year, we put a target of 20%. It's a good target, guys. Does that mean you can't earn 30 or 35? No, it doesn't. But your target for your strategy is 20. So you trade in such a way that you're aiming for 20, and you get a bit of luck and you overshoot it. Fantastic. If your target's 100%, then your strategy is going to be completely different. It's going to be a lot higher risk, and the probability of you blowing your account is a lot higher, guys. So remember, what we're trying to do here is nice steady Eddie, teach you how to trade. And once you know how to trade and you've got your account built up, then you can decide, hey, this year I'm going to go all in and try and do 100%. Or 50% or whatever it might be, guys. But learn how to trade first. Stop blowing your account first. And then you can start taking higher risks. Okay, speak to you all again on Monday. Bye for now.